Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro dollar. An immediate countering combined key reversal down, bearish engulfing pattern, and bearish closing long black Mariposa yesterday, after the previous session's second bullish white soldier. The market initially started to move up to the 2019 high at 115.70 but failed to make it and turned lower, down through the congestion between 114.82 to 114.95, formed from the January and February 2022 highs respectively, but halting and finishing lower soon thereafter. Overall, we restarted the move lower from the break below the dark blue late January to very early March descending wedge pattern. Now the primary target for this has been reached, and we seem once again to be making significant move down towards a much harder to reach secondary target, which X1 down at 113.56 zone, though that still has a question mark over it. Looking further above, we have the November 2020 low at 116.02, whilst below we have the purple neckline extension, which is currently that's to the August to September 2020 head and shoulders top, currently at 114.12. which, along with the congestion at 114.22, stopped the market's decline dead either side of last weekend. Now so far today, a dip before a pullback up into the 114.82 to 114.95 congestion area overhead, but not staying there too long, though we are just below it at the moment. Cable, aka sterling against the US dollar. A reactionary key reversal down and bearish engulfing pattern yesterday, if only just on the latter, after the previous session's second bullish white soldier. The market tried a small rally, but the move up to the bright red upper bear channel line, currently at 133.92, proved to be too much, and prices turned and dropped lower. Down through the purple neckline extension of the small April to May 2025 head and shoulders continuation pattern, currently at 133.21, down through the bright green neckline, currently at 132.95 for the August to October 25 head and shoulders top, and the nearby March 22 high at 132.98. Indeed, prices pushed down through the previously mentioned congestion, currently between 132.98 to 133.20, but halted just ahead of the lesser Fibonacci line at 132.46. Overall, we are still sitting within the bright red early February to date bear channel, which is currently at 131.49 to 133.92. Plus nearby on top we have the now flatlining mauve medium moving average, currently at 134.02. Overall, in a bigger picture, prices maintain their stance within the previously broken and now repaired, very shallow, even bigger, dark blue bear channel, dating between early July and early August last year to date, which is currently at 129.60 to 135.87. It's actually quite an interesting one, that one. So far today, well, a move up to the bright green neckline and also down to the lesser Fibonacci line at 132.46, but right now we're just above that lesser Fibonacci line at 132.65. US dollar against the Japanese yen. An interesting reactionary combined key reversal up, bullish closing white Mariposa and bullish engulfing pattern yesterday, if only just on the latter, after the previous session's indecisive spinning top. There was also a second bearish black crow. The market initially started to continue the piercing of the lower bull channel line, which is currently at 159.44, of the recent showrunner here, which is the dark blue mid-February to date bull channel, currently 159.44 to 162.27. But soon reverted higher, back up within the dark blue bull channel, over the May 1990 high at 159.61, and closing with the highest high and high close since July 2024. So looking at this year's action, we still have a mid-January to mid-March double bottom pattern. The primary target X up in the 161.49 area and a harder to reach secondary target X1 up in the 163.19 area. These targets will be coming under threat if prices establish themselves below the dark blue bull channel, which I haven't done as yet. Overhead, we next have resistance at the congestion at 160.05 and the April 1990 high at 160.34. Additionally, we have up there the bright red middle time, currently at 160.49 of the mid-September 25 to late January 26 bullish Andrews pitchfork. In the bigger picture, prices are still within the September and November 2025 to date bright green bull channel, which is currently 153.84 to 161.22. Now, so far today, a counter-reactionary move back down below the May 1990 high and back below the dark blue lower bull channel line, though only tentatively it seems when compared to yesterday's action. US dollar against the CNH, the offshore Chinese yuan. An immediate countering key reversal up yesterday after the previous sessions, well, what looked like a possible bearish closing black Mariposa or inverted hammer pattern, as well as a second bearish black crow. Now, prices pushed up through the May 23 low at 689.53, but the rise was stopped by the bright pink upper time, currently at 690.16, of the bright pink mid-January to early March bearish Andrews pitchfork, which I had hoped and so far has seemingly fulfilled my wish to see this perhaps as the recent bearish angle of attack. Further above, we have the bright green short medium moving average, currently at 692.15, which had previously capped the market like a makeshift downtrend, followed by the interesting bright red trendline extension, currently at 693.59, of the May to August 2022 ascending triangle. Looking below, we have the significant 50% Fibonacci line, the February 22 to April 25 move at 686.60, not too far away, with another congestion below that at 685.58. Now, so far today, a further small move higher, pushing up over the bright pink upper time, but so far failing to establish up there, and dipping down to the May 23 low, which to be honest isn't that big of a move, so the market still seems to be weighing up its opportunities right now. US dollar against the Brazilian real. An interesting reactionary bullish closing long white Mariposa yesterday after the previous session's second bearish black crow. The market rose up through the two lesser Fibonacci lines at 524.07 and 527 even, peaking and closing right on the latter one. Overall, the major pattern here once more works. It is the important dark blue mid-December 24 to mid-April 25 bearish shift pitchfork, with prices utilizing the dark blue middle time, currently at 516.77, as a base. This long-running dark blue bearish shift pitchfork is still the very excellent showrunner here for this market. Just underneath the dark blue middle time, we have the really interesting combination of the 50% Fibonacci line, the October 19 to December 24 move at 513.82, and the bright red and quite old October 2018 to date, so coming up to 8 years or so, 7.5 years, October 2018 to date uptrend, currently at 514.09. These two were very instrumental in slowing the decline of the market in late January and early February, and holding up prices in late February and early March. Meanwhile, topside, well, we pushed up and closed over the declining green short medium moving average, currently 525.43, but further up is the lesser Fibonacci line at 532.15, but more importantly the capping action of the declining mauve medium moving average, currently 532.33, which had capped the market this week and last week and the week before. So the overall continuing question here from all the recent action is whether over the last 3 weeks where we still have either a double bottom and or a double stroke triple top. That question is still open at the moment. US dollar against the Mexican peso. A combined key reversal up and bullish engulfing pattern yesterday after the previous session's indecisive doji cross. The market punched up through and closed over the dark blue doubled up and breached upper bear channel line, currently at 1773.06, of the original November 25 to February 26 bear channel, and just over the slowly declining mauve medium moving average, currently 1781.70. We now have a very impromptu and very recent March-based downtrend, currently at 1791.81, as well as earlier March highs, interestingly each lower at 1802.15 and 1797.60. That sit above as well as the January high at 1804.40. Looking further below, we have some small congestion between 1756.95 to 1759.58, containing the combined August 2017 and July 24 lows at 1759.58, with further below the pierced green short medium moving average, currently at 1749.05, with a little lower underneath that, the July 2017 high at 1743.74. Now, as I've said repeatedly, we have a small but significant pattern to consider here. Is the whole mid-January to end of February action is a double bottom, Adam and Eve type, with a primary target already achieved and a secondary harder to reach target X1, not too far above, in the 1805.95 zone. Now, I have begun to wonder if target X1 is maybe just a little target too far, especially as we seem to be constructing a possible late February to date double stroke triple top pattern here. Now, so far today, a little lower on the open and an attempt to reach yesterday's high, but really looking like a spinning around the mauve medium moving average right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.